So how did you spot that the market was different, that the volatility was different? Was it just by looking at the chart and seeing different patterns or something different?
I have, uh, I'm a bit like of a trading nerd, I guess you would call me. I
Yeah.
like keep a lot of statistics. So I basically download 1 minute chart data sorry, not 1 minute chart data, daily chart data, but with all the ticks as low as the 1 minute chart. Anyway, look, I'm describing this badly. I download daily chart data. I put it into Excel and I get the average daily range of each daily candle. And then I'll plot that onto a graph and it tells me the average daily range. I can't really show that to you. I don't think this software
Okay.
has. Oh, never mind. I'll just put it in the article. You'll see it in the
Okay, awesome.
article.
Yeah.
Yeah, because a lot of people are listening here, so they won't be able to see it anyway. But yeah, so I plot this all into a chart, and it gives me an idea of what the average daily ranges are. I've since automated this process by using a feed from Oanda to download the data via API onto a database table on my website where I have a private page that I can see with these stats, which I'm probably going to make public at some point. It's just in the testing phases right now, but um, in front of me right now, I have the average daily ranges across all the majors. So all the major pairs, on average, how many pips do they move in a day from the highest to the lowest point? And that tells you just how much stuff is moving. So volatility, and it used to be 165 pips on average in 2008. Because that was pretty much the peak time for Forex. And that's one of my best trading years ever was 2008 because the markets were just absolutely crazy. And then it started dropping down from 2008 pretty slowly until 2014, where it was at its lowest point that it's been in the past, I think the past 20 years. I could be wrong about that. And then all of a sudden, boom, it picked up in 2015, 2016. It went back up to what it was in like 2010. And then all of a sudden, it started swinging back in the other direction and going back down. So right now, to sum this up, we're seeing 77 pips. In 2018, we
Yeah,
saw an average movement of 77 pips per day across all the majors, which is very low.
which is less
And
than half than before. It's pretty crazy.
yeah, yeah. And now this year we're seeing less. It's only 3 months in, so we can't say what it will be like
Yeah.
for the whole year, but we're seeing even less. We're seeing it drop down to 2014 lows. So it's averaging around 70 to 73 pips per day across all the majors, which is so low compared to
Mm.
what it's been. So yeah, that's why I've been adapting and changing how I trade and looking for ranges mostly.
That's interesting. Was your performance in 2008 based on the financial crisis? Do you think that there was a link or was it two different things?
Yes, I think there was a huge link. Uh, there was a huge link. It was crazy. 2008. Anyone can see this themselves. Go to GBP JPY. Scroll back your charts to 2008 on the daily, and you'll just see some of the most insane movements you'll ever see in the Forex market. Uh, wait, let me. I really hate saying things without being sure what I'm saying is true. So I just want to quickly scroll back on this chart to tell you like the precise numbers. So there was one day, this was probably the biggest candle, one day where GBP/JPY moved 2,720 pips in a single day.
Wow.
That was the biggest, but on average, it was doing, 600, 700 pips a day back then, which is completely absurd compared to today where it's doing like 100 pips a day, maybe 200 pips on some days. So yeah, market conditions in 2008 were absolutely crazy. I was trading almost exclusively GBP JPY back then, and I would take a trade, and within an hour, I've made like 500 pips. It's just gone boom straight in my direction. And yeah, it was just a crazy time to trade. It was awesome. And I think it was thanks to the financial crisis, which kind of makes me feel bad, because I always say to myself, I hope we get those kind of market conditions again. But then I'm thinking, but do we have to go through another financial crisis for that? And a lot of people would get hurt. So probably better that we don't see those market conditions again, because I think it's going to come at the cost of a lot of people. But yeah, who knows?
But it's quite a good thing to know that you can still survive in a financial crisis yourself.
Definitely.
That's kind of a good thing.
Yeah,
Now,
definitely.
Given the fact that there might be another crisis coming up in the next few months or years, how do you think people should adapt? Should they just keep trading the same thing they trade, or kind of do something different?
Okay, if there is another crash, which I'm not convinced there will be. I mean, eventually there always is, but I've been hearing people say there's a crash coming in the next few months for the past 3 years, and it's just never come. So I'm not convinced that it's coming, but if it does come and the conditions are the same as 2008, then things are just going to go crazy in the Forex world. There's going to be a lot of adapting needed to trade those conditions. I think reversal trading will be mostly, I wouldn't say out of the window. It's just going to be a lot harder to trade reversals, and you're going to focus more on continuations of trends. So you're going to be looking for the trend, and you're going to be looking how to get in on that trend and keep that trade going.